What's going on? Welcome back to Turning Stocks. Today is February the 7th. I want to give you a quick pre-market update, go over some of the hot movers and what big money is doing today. Before we get into any of that, make sure to hit that thumbs up. And with that, let's get right to it. So starting off, as far as data points, I'm going to cycle back to this in this video because it does come out in 1 minute and 52 seconds. You have non-farm payroll and unemployment. Currently, futures are somewhat mixed. Dow is up 0.04, S&P it is flat, and NASDAQ it is down 0.07. So again, I'm going to cycle back to this once the data does truly come out. But starting off, SOFI is slightly green. Now it's looks like it flipped to red, but I think yesterday's pullback was prompted because of a negative analyst rating, and I think that was largely unjustified. That's probably why shorts did return yesterday, but going into today, 12.28% of the free floats being shorted, works out to be 132 million shares overall of being shorted. And ultimately, going over to this right here, I'll give you a quick overview of SOFI. This is Amazon, but SOFI, looking at the open interest, you're not seeing any crazy walls for today, so you won't see any crazy manipulation for shorts or whatever to try and suppress it. Right now, with it at $14.80, trading between this S2 and this S3, so $14.91 is going to be that next strong kind of target slash resistance, and then $14.24 is going to be the next strong support. So with jobs data coming out in roughly a minute, definitely could see some crazy volatility. ELF just came out with their earnings. Largely it was a flop across the board for the most part, so yeah, it's definitely feeling the pain, down 25.13%. It's not heavily shorted, so 13.03 or 09% of the free float is being shorted, works out to be 7.22 million shares. But you can kind of see shorts were anticipating negative earnings because they did start to increase leading into the earnings, so maybe the writing was on the wall or something. But with that 66 and change, it is honestly, it's below absolutely every key point that I generally like to look at. So yeah, it is what it is. So just kind of trade accordingly. And this is pretty much throwing it back to, I think it is like 2023 levels, going back over to let's say the last 5 years. Yeah, like 2023 for the most part. It's definitely a brutal day. But aside from all that fun stuff though, moving over to Palantir, they are gaining huge momentum. So over the last 5 days, they are up 39%. Of course, this spike right here was due to their earnings, but even yesterday, it's just been moving up and up. So definitely something's in the water at Palantir. They did actually have news though, mind you, yesterday. And it was after hours, just saying that they won several awards. So that's pretty good. Nothing really crazy though to go out and buy Palantir because of that news. But 3.79% of the free floats being shorted, works out to be 79.43 million shares overall are being shorted. So it's kind of comical. I do see a lot of people talking about Palantir. It's like, hey, this is overvalued. It's a squeeze, like a short. You can pretty much short it and make a lot of money. Honestly, I beg to differ. Anyone betting against Palantir has lost largely over the last little bit, and yeah, I think it will continue to be like that for at least the foreseeable future. Right now, with it at 112 and change, it is trading between this R3 and this R2. So 102 is going to be that next strong support that you just watch for. Flip side, 129 is going to be the next strong target slash resistance point. Moving on, so Canopy Growth, it is down 21%. Similarly, they did have their earnings and it was a flop. And I think in general, everyone kind of knew that. It did oddly have a abnormal spike. I'm not really sure what prompted that on the 5th, but I think just Canopy Growth in general and the whole cannabis sector is just, it's obviously profitable in some aspects, but I think it's just there needs to be a lot more consolidation in the foreseeable future in order for just companies to thrive. So I think there will be 2025 will be a very interesting year for that sector. 9.45% of the free float is being shorted, works out to be 11.55 million shares overall are being shorted. And right now with that 223, it is trading between this pivot and this S1. So 192 is going to be the next strong support. I don't see that being touched today. That's a little bit overkill, but flip side 234 definitely could be achieved. So you might see some gravitation towards that. So it might be a good swing trade, but I think based on their earnings, that kind of solidified the writing on the wall that you long term, maybe it's not best to kind of touch it. But ticker is RZLV, Resolve AI, and so it is gaining some pretty good momentum. Not all that much in news, as you can kind of see. Last news did come out on February the 5th, which, mind you, was very, very good, because it did signal that they got all these new deals. So Dunkin', BJ's, Cole Supermarket, Discount Tire, so a lot of big names there. And so I think, yeah, honestly, that's really good for the company itself. Only downside, what I don't like, is this is a kind of a SPAC rollout that was in July, and as far as I can see, there is and was no financials submitted. So kind of interesting scenario, odd, but you're kind of investing blind or just into the fundamental business without knowing a lot of their financials. 2.58% of the free float is being shorted, works out to be 917,000 shares. So this is kind of what the market does, like to squeeze ish, like low float companies, but still 2.58% is very, very low. With it at 322, it is trading between this R1 and the pivot. So 309 is going to be the next strong support. Just watch for that to hold, and maybe dependent on once the market does open and kind of digesting the recent data, it might touch that. But very good momentum lately, so 397 is going to be the next strong target / resistance point. And quickly moving back over here, so non-farm payroll came in significantly lower, so 143 versus 205, and then unemployment was lower, so the actual came in at 4, forecast was 4.1. so generally that's good. Last couple of data points linked to labor hasn't been all that great, so market seems to oddly is going down. Maybe this is one of those inverse kind of scenarios. Honestly, I kind of hate this market right now, similar to what happened in early 2024, late 2023. The market desperately wanted negative data, and so whenever you got data such as this, you would obviously assume unemployment rate going down is generally good for the market. Non-farm payroll, obviously I think there might be some excusable cause to that, but that's also definitely kind of a red flag. But generally, if you had good data, the market would go higher. The market was more focused on the unemployment than non-farm payroll, but what do I know, right? You guys do your own due diligence at the end of the day. So let me know your viewpoint. So it looks as though the market is slightly pulling down. We'll wait and see what happens once the market does open, whether it's kind of a buy the dip moment, because once the market does open, that's where big institutions can buy puts and buy calls depending on what they feel. So yeah, let me know your viewpoint on all that. Don't forget to hit that thumbs up and subscribe. What stocks are you kind of looking at today? So throw some tickers in the description below. With all that said, appreciate all of you watching.